The Dow Jones Industrial Average and the S&P 500 closed higher for a fifth consecutive session. Hello, everyone, and welcome to the See Your Profits Thrive broadcast for Monday, April 28th, 2025. I'm your host, Dr. BJ Love, and I'll be bringing you today's broadcast here at See Your Profits Thrive. We use time-tested methods and indicators that helps us to navigate these markets with calmness, certainty, and confidence. The major averages were able to drift higher to kick off the week in a seesaw day that left the Dow Jones Industrial Average and the S&P 500 positive for a fifth consecutive session. The Nasdaq finished with a modest loss. At the close, the Dow Jones Industrial Average added 114 points and finished at 40,228, while the S&P 500 gained 3.5 points and settled at 5,529. The Nasdaq lost 16.81 points and closed at 17,366. Breath, the heartbeat of the market, was positive, and the VIX, the aka fear gauge, increased by 0.29 and closed at 25. And as we reiterate on every broadcast, if that VIX remains above the threshold of 25, the markets tend to be very, very volatile and move in the inverse direction of the VIX. Now, crude oil prices fell by $1 and settled at $62 a barrel. Gold prices jumped $62.80 and finished at $3,361 an ounce, while Bitcoin closed the session at 94,600. Now we're going to look at all of those indexes and commodities, oil and gold, individually to see how they display on our charts that we use to track whether they're in an uptrend or a downtrend. Now at this point, we will move on into the charts so we can determine or surmise with a great degree of accuracy where the market is now and where it could be headed. We use our proprietary charts here of weekly 1040 grid that gives us that indication on the four indices that we follow: the S&P 500, the Dow Jones Industrial Average, the Nasdaq Composite, and the Russell 2000. So I'm going to go ahead and enlarge these charts now so we can look at them in a magnified view. This is your S&P 500. Now we see these price points here. Each one represents 1 week. So for the past 3 weeks, we have been in, we have a red background, which indicates that the market is currently in a bearish trend or a confirmed long-term downtrend. Let me go ahead and explain. Here we've been in a bullish trend for about 2 years. Since April of 2023, this background has been green, and you can see these price points are rise, and they'll come down for a few weeks, and then, but the background or the personality does not change. It still is in a long-term trend because the price bars are above this rising moving average. This is our threshold in the sand, that if our price continues to be above this rising moving in average and our background is green, we are in a long-term confirmed uptrend. Now, over the past few weeks, that has changed. We reached a high of on the S&P 500 of 6,000 and change, and we begin to roll over 1, 2, 3, 4, 5 weeks. Now that price is below this falling moving average, and that signal our proprietary software that we have programmed into these charts to change colors, letting us know that a trend change has taken place, or the upward trend has reversed, and we're now in a downtrend. And we've been seeing that over the past 5 weeks. Well, we're into the fifth week right now. Even though we've had this very high volatility, remember we said in the introduction that the volatility measure is above 2020, we will be in a very volatile state and the prices tend to fall. So you have seen that taking place, even though we've had an attempt here in the week of 4-7 to rally, only to stall out the following week. And here we are now in the week of 421, trying to reestablish that uptrend. But however, we are below this falling moving average, and we have our 10-week moving average, which has crossed below the 40-week moving average, and then we have our confirming indicator here in the MACD that is in a negative state, projecting with a high degree of accuracy for the next 30 days at least. We will continue in this confirmed down state on the general market. Now that is the S&P 500, and so we can look and see that there is a similar pattern here for the Dow Jones Industrial Average. We have a red background. We have our 10-week moving average, which is below our 40-week moving average, and we call that in the industry a death cross. And we have our confirming indicator, the MACD, that says this is a momentum indicator that says this particular trend is projected with a high degree of accuracy to continue until we can see our price break above these moving averages, and that moving average, that gold moving average, crosses back above that black line, and then the background will return to green, and we will see this historic indication of the prices moving up, 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 up until we see a reverse. Now that is the Dow Jones Industrial Average. We are now going to look at the NASDAQ Composite. This has a similar pattern, so you can see two of our major averages have similar patterns. Now we're showing you that the NASDAQ Composite, which usually reflects the tech sector, is still down. We went down hard 2 weeks. We came up hard for 1 week. We came down hard. We came up hard for 1 week. We were down hard last week, and then we came back up hard this week. However, these price bars, which represent 1 week of time, is still below this moving average now, which is falling, and we have what we consider the death cross, the momentum chokehold, I call it, which is confirmed by our MACD, or our moving average divergence, which has been proven to be very accurate over the past 50 years through much study and much observation, that this pattern repeats itself. Okay, we're going to move on now to the small caps, which is the Russell 2000, and you can see again, same pattern, red background, death cross, price below falling moving averages, confirming the momentum indicator, which is the MACD. When you have all four moving averages moving in the same direction on a weekly basis, which is your long-term pattern, that is the dominant trend of the market. Short-term trends like the daily and some of the half-day charts that we're going to look at, they fluctuate, but long-term trends dominate, and that is what we have here right now demonstrated in our weekly view of the market. Now we're going to go to our daily charts, and we're going to see what they look like. And what we like to see is that the daily charts and the weekly charts moving in the same direction, which gives more evidence that the trend that we are in at the present moment is projected to continue in the near future. All right, so we're going to go and look at our other set of charts here. Now, this is going to be our daily charts, and we're going to look at the VIX. As you can see, it spiked up all the way up to 60, and it has been coming down, over the past few days and showing some signs of weakness. And but no, if we go to the weekly chart on this VIX, we can see that it is still above. It is above a rising moving average, and we do have a relative strength in a very solid positive position. So at this point, we can just conclude that the VIX is taking a little bit of a breather, even so, but it is above that threshold of 20. So that indicates that we could witness more volatility. And usually when the price of the VIX goes up, the prices of stocks and the general market goes down. They move in inverse directions. All right, and then now we're going to look at the Dow Jones Industrial Average. This is another view of our weekly chart. We're going to move on to our daily chart. So you can see our weekly chart and our daily chart are both moving in the same direction. You can see that he has what I call a inverse channel. That channel was positive here back in January, but has since then has fallen. Prices below our moving averages. We use what is called a Fibonacci moving average. Fibonacci is a indication that pinpoints cyclical movements in the market or in a particular stock or ETF. So now, since this channel, which I call what we like to see is a positive channel. Here's one of our stocks that we really like, PLTR. It is in a positive channel. This has been moving up from $66 to $114 over the past 2 weeks. And if we look at this on a weekly chart, you can see that last year at this time, this is a 1-year chart, this stock was $20. Our system picked it up. It broke out from that $20, $25 state, went all the way up to $125. We rode it that far, and we're still holding on to it because we're using our theory. This is our line in the sand. This is a rising moving average as long as the price, these are here 1-week price bars. If the price remains above the rising moving average, we hold on to it, and as you can see, it's starting to recover. Wow, how good is that when you have an indicator that gives you that type of signal, and it alerts you way ahead of time, and it keeps you, according to studies that go way back to 1952, if it has a positive and rising relative strength, that gives you more confidence that this particular stock or entity that has this configuration will continue to move up, even though the market dragged it down for about 1, 2, 3, 4, 5 weeks, but now it is recovering. Okay, that's going to take us now. We're going to look at, so we're going to look at Bitcoin, BT slash BTC. Now Bitcoin has moved down from 110,000 all the way down here to a low of what is that, of about 74. Now it's moving back up into that 95,000 range, letting you know that, hey, Bitcoin is on the radar. Let's see what he looks like on the daily real quick, and then we'll close out The daily is moving up, the weekly is moving up. So with that said, every day and every way we get better and better.